Why Cyber Roundup mattered, math and charts on what we know. I'm Brian. Welcome to my Tesla weekend. So as a reminder, of course, as always, as you know, this is the full version that goes out on Friday on the second channel, My Tesla Live, or maybe it's the condensed version over the weekend. It's whichever one you see on the screen. Really, you should watch both because they're both so good. Sometimes the condensed version has extra visuals and graphics and stuff. A quick welcome to newest patron members, Frederick, Sathish, My Charged EV, and John Greer. Guys, thank you so much for your decision to support the channel. So we didn't learn new information so much, did we? Mostly what we learned was things we kind of already knew, like, you know, that a lot of the things that we had been told in the past are still on track. There's still good news all around. What is the road to 100 million? So we don't need 50% year over year. We need 33.9% year over year. We're going to be at about 3.5 million by the end of this year, 5, 8-ish, 11, and so on, at just 33.9. Now, the run rate, you're like, wait a minute, well, this would require a run rate of 25.9 million. That's not even proposed. Well, no, but a run rate of 20 million by 2030 is proposed, and a run rate of 14.5 million by 2030 is 25% more likely. But the truth is, we're going to see a lot of bigger numbers here that will help the S-curve a bit, you know? So that's the road, 33.9% year over year. And the trick with getting to really above 10 is that it's never been done before. Now, I was telling Tesla Herbert in an interview a while back, Tesla stands the best chance to reach 20 million EVs. And not just 20 million EVs, but 20 million cars. And why is that? Because no one else is planning for it. Tesla is planning for it. That gives them a non-zero chance. If you're not going to plan for 20 million, you're not going to hit it. It's not something that just kind of happens. It's not like software where you can just print more. You have to actually build them. You need the factories. You need the supply lines. So let's talk about the connectivity cash bomb. Let's say we hit 100 million. And you know, in 2030, the maps are no longer included. It's $10 a month. And I assume some other features as well. What does it cost? Does it actually incur costs? Yeah, you've got to pay somebody, AT&T or Sprint or T-Mobile, or I'm sure I'm saying some that are repeated because there's been mergers. You got to pay somebody, but you don't have to pay them much. And data gets cheaper all the time, and a lot of the data happens at home anyway. And there's ways to minimize how much data you actually need by stuffing the car full of maps when you're at a supercharger, or driving past one, or parked close enough to one. So there's ways to mitigate that, but really the data is extremely valuable. You want that data either way, so it's going to be helpful. But 100 million cars at $10 a month is $1.2 billion a year for something that you could probably give away for free or close to it. And I'd argue that $10 a month is close to free. So the connectivity cash bomb, 1.2 million a year coming in just from maps. That's a pretty good deal. But what about the FSD cash bomb? FSD cash bomb. That's going to happen, isn't it? What if you get a 50% take rate at 12,000? Well, it's not going to happen. It's not going to happen this year because beta in wide release will not get you to 50% take rate. Beta in wide release will get you maybe some more, maybe, but it actually coming out. So do you think it'll happen next year? Well, what about out in 5 years? how about 2027? That's not $130,000. That's $130 million. Take rate of 50% each year after that. Now, this wouldn't be new each time. It would be one time. But if 2032, you would get a cumulative $601,000 million. $601 billion. That's well on its way to $1 trillion just from first-time FSD revenue sales. And I'll go ahead and unlock these as well, because it's kind of interesting. So let's take a look at what we would need to get there, factory by factory. And this isn't from my 11-year production prediction tracker. This is just some quick and dirty math I put together just for this. To get there, Fremont, we know, can do 600. It may be able to get to 900 with some retooling. Shanghai, we know, can do 1.2 million. Probably closer to 1.5. They're going to build another Shanghai factory. We know that. That's already in the works. And it's going to be a next-generation factory, and it might be building a more simplified car. Certainly simpler than the Model 3 that's coming out of China right now, which doesn't use front castings. It could be 1.3, it could be 1.7. All of these are realistic. Elon said the factories will have an average of 1.5 to 2 million units. These are big numbers. Berlin, 800 is a floor. 1.2 to 1.4, more realistic. 1.2, because we know we got it in Shanghai, and it's a more modern factory. Yeah, it's going to happen. Berlin's next phase, which is already in planning, they've already started some permits for it, would presumably be more efficient. Maybe they'll build a simpler car. Texas, 900 is the floor. I think 1.2 to 1.5 is more realistic. Second Texas, when they put another one that looks kind of like what we already got over there, it'll be bigger and faster. And then a bunch of next factories. Maybe as soon as, if there's an announcement at the end of this year, typically when they announce them, they break ground kind of the next day. So it would launch, not in this year when it's announced, not in next year, but in 24, when it's had time to be built and a little bit of ramping. And these numbers aren't out of the gate. These are the eventual numbers. And then others. 2 more the next year. 2 more a couple years after that. That gets us to production in the 13 to 19 million unit range. Just with what we see here, that would give them more production than any other company is currently doing or has ever done. Pretty sure that's right. So that's the factory breakdown. So extreme scale is something we had talked about. That is the whole point of Master Plan 3, is extreme scale. All of these factories, when we see Master Plan Part 3, we may see factory announcements then. Everything's got to move. And it's got to move quick. It's got to move big. So that's what this is all about. The factories are streamlined. He said in the earnings call in the shareholder meeting that it would be that each building would be a monolith. And in the Twitter space that I was on with Tesla Herbert yesterday, we talked about that. And he said, what does that mean? Well, it means in Fremont, there's a bunch of buildings that do not flow well. In Shanghai, there's a few buildings that flow a lot better, but in Texas and Berlin, it's one building. Materials go in, and some parts, and a whole car comes out the other side. It's very streamlined. Because if you're going to save $50 a car, just $50 in lost time, extra transit costs, extra wasted space, you're going to have $50 a car, million cars a year, 10 years, that's $500 million, my friend. And if you're doing it in 8 factories, that's $4 billion, and now you got enough money to build another factory, just from efficiency gains. Because there's only the mega castings, Removing those 170 robots, that army of robots, means the factory gets to be smaller. The production line gets to be shorter. That's extreme scale. So that's all I have about that. So let's talk about buybacks. Buyback for what? Are buybacks a good thing? Well, they need the cash. Can buybacks hurt us? See, dividends, I would argue, terrible idea. We don't need to be draining the company of cash. But if Elon is looking for a place to hold his cash, a bank account is one of the worst places to put it. It doesn't do anything while it's there, except get you a direct line to someone to call when you've got a problem. You get that with $1 billion, the same as $18 billion, I assure you. So where could you put the money? See, I talked earlier today with James Stevenson about buying stock in your own company. Can you do it? And the answer is you sure can. Treasury stock is what it's called. You can buy shares without absorbing them. Now, you can buy them to permanently erase them from the record, but you can also buy them and just hold them. You could say, well, today Tesla's trading under 900 for some reason, and I believe it's going to be at or above 900 when we need the cash. Buy back $1 billion, buy back $5 billion, sit on it, and when you need the cash, sell them. Sell them. You can. There's no reason you can't. It is allowed. It doesn't give the company additional voting rights, and it doesn't alter the earnings per share, I don't think. But that's not the important part. The important part is, if Tesla believes that the stock is only going up, it would be the best place to put their cash reserves. So it's not necessarily a bad idea. And then, of course, we've got the whole matter of the split. The stock split is upcoming. It's 3-1. It's upcoming on the, I believe, 25th. Someone can check me on that. It doesn't matter, I guess. I prefer the split. I'd like the split to be even splittier. I think having the lowest possible share price would allow more retail investors to participate more frequently, improving their dollar cost averaging. And there are people who will save up to buy one share, and then when it's time to buy it, go, gosh, I don't know, man. Did I get it at the right time? Dollar cost averaging would save that. This would also help employees with their employee stock purchase programs. It would be better. But I've also read that making the share value too cheap to buy could increase short selling because contracts are sold in lots of 1,000, I believe. So that is great. This will put, if you bought one share before the last split, what are you up to now? 15? That's pretty exciting. And of course, a small split means we can do more splits down the road, which is also exciting. And a lot of people were asking in the say questions, when is the split? I must know when. My friend, if you're trying to time some kind of artificial move up or down with the split, the algorithms will beat you every time. They move inhumanly fast and consider factors beyond our understanding. Big thanks as always to my Patreons who get early access, enhanced stuff, extra content, direct dialogue with me. All the things that you really need to have in your life to feel complete. Thank you so much for choosing to support the channel. It's a smaller channel, I know. Well, there it is, and there you go. If you want to see the full, uncut, 30-ish minute version of this episode, head over to the second channel, link in the description, and subscribe over there if you want to catch these live each Friday at 7 p.m. Pacific, as well as the Fast Charging with B&B podcast, co-hosted with Bear from Bear's Workshop. So, what did I miss or misunderstand? Tell me in the comments, and stay tuned, stay juicy, and I can't wait to hear from you clever robots on the other side. With that said, I should address the poll. The question was, how far away is my wall? And the answer is, maybe farther than you think. I've done this once before, but it's real far. It's, from my focal point, it's more than 5 feet away. But it's far. It's far. Fun. Pointless. Super silly.